Benjamin Graham famously introduced us to Mr. Market, a business partner who is frequently manic depressive. On Friday after hours, we saw Mr. Market wakes up in a very different mood. Himes surged nearly 40% on reports of a settlement and partnership with Novo Nordisk. But this move isn't just about a headline, it's about the market finally correcting its own emotional extremes. In my last two videos, I was pounding the table on Himes at a 50% discount. Why? Because the market was a victim of presentism, the cognitive bias where we over-extrapolate current legal headlines and ignore long-term fundamentals. Investors were pricing in a permanent impairment scenario based on litigation risks. Friday's news of a settlement with Novo Nordisk acts as a fundamental defogging event. When you remove the existential threat of a patent war, you remove the excuse for a depressed multiple. By partnering to distribute branded Wegovy, Himes moves from the legal crosshairs to a strategic pillar of the pharma supply chain. The uncertainty that was used to justify the sell-off has been largely mitigated. When the regulatory overhang is removed, multiples typically expand towards sector peers. Even with the 40% post-market move, the stock remains significantly undervalued relative to its growth profile and cash flow generation. As now the legal dust is settled, we are now in the value realization phase. I view Himes as a strong buy under $20, offering a compelling risk-adjusted entry point. The thesis has played out exactly as the fundamentals suggested it would. Risk was mispriced, and the market is now forced to catch up. Disclaimer, I long Himes. This is not investment advice. This is for education purposes only. Do your own due diligence.